FBI, move away from your computers. We have a warrant from a federal court. Please stay in your seats and let us do our job. Thank you for your cooperation. You, get out.
Let's talk about finance lessons from the 5th episode of Billions based on my work experience at Goldman Sachs in New York City and based on my work experience at the top hedge funds in the world. Now, please be sure to comment, like, and subscribe and stick around because at the end of this video, I'm going to grade the episode for Wall Street realism. 3 key lessons from this episode that we will discuss are: number 1, how to make money by understanding what other investors own. Number 2, how to make money using the media. And number 3, how to stay out of trouble when it comes to insider information laws. Now, in this episode, Bobby makes a fortune using market signaling and game theory by having everybody in his life and on Wall Street think that he's having a midlife crisis and that he's going to shut down his hedge fund.
Sell everything.
Everything.
But take it slow. Control the bleeding. Then we'll dump sector by sector, starting with telecom.
People will think
Then I'm out.
Now, Axe said to start selling telco for a good reason, which we'll come back to in a second. But he literally disappears from work and has his sidekick Wags tell the employees to start liquidating the portfolio.
Why are we bailing?
we're pruning slowly so we don't scare the market and keep this on DL.
Now, Axe knows that even though Wags told the traders to keep this on the download, meaning DL, that of course this will leak to the street as the employees will start interviewing elsewhere or even start their own hedge funds.
This continues. You and I set up shop. I got the contacts, the ideas, the killer instinct.
Axe even tells his wife to pack their bags, and he prepares his boat to get ready to take off as he prepares to leave the business.
Why work so hard if not to do what we want when we want? I'm sorry, I'm getting out of the game.
Now, let's get back to why Axe is selling his massive long positions in the telecommunications sector. It's because a friend of his, who's the CFO of the largest telecommunications company called Mundia Telco, gives him this piece of insider information, which of course is illegal.
Constantine, my old friend.
Showed.
Of course.
I have been at Mundia Tel my entire career. What people thought was bedrock was really now everyone is going to finally see the truth.
So the CFO of Mundia Telecom basically tells Axe that they have material fraudulent accounting issues at Mundia Telecom and that the telecommunications company will likely go bankrupt. And this explains exactly why Axe told his traders to sell their massive long positions, starting with the telecommunications sector. Because if the largest telecommunications company goes bankrupt, then all other large telecommunications stocks would likely go down a lot. And this is exactly what happened. The second the news of the Mundia Telecom issue hits the tape, Axe can then tell everybody that he changed his mind and that he will return to work. Axe finds out about the news while on his boat, and back at the office, here's the reaction to the news on the telco bankruptcy.
CEO of Mundia Tel and office presidents in 6 countries caught cooking the books.
Stocks tanked 89% already.
Now, the show is incredibly well researched because there's a precedent for this, because back in 2002, telecommunications giant WorldCom announced the largest bankruptcy in history at that point because of similar accounting issues, which pulled down other large telecommunications companies as well.
Talking about suspending trading.
The whole sector's swirling down the cesspool.
The whole market is going with it.
Good thing we were out.
Yeah, it sure is.
Now, if the largest company in a sector goes down a lot, then other companies in the same sector will probably go down a lot as well. For example, if a company like Intel reported awful earnings, then it could pull down other semiconductor stocks like AMD. Why? 2 reasons. Number 1, investors might think that there's something structurally wrong with the chip sector, which might hurt many chip companies. And number 2, because a lot of people invest in sectors by transacting in ETFs. And as you can see here, with the semiconductor ETF, which has the ticker SMH, if we go to holdings for SMH, we see that there are many semiconductor companies in this ETF. And if you want quick short exposure to a theme like telecom or semiconductors, then hedge funds can short ETFs like the SMH here with semiconductors, for example. And ETFs, meaning exchange traded funds, are becoming so popular to invest in because the fees are very low. And most hedge funds and mutual funds massively underperform ETFs, and hedge funds charge an unjustifiable 2% annual management fee, which is why Axe made this statement right here, to an investor about why investing in hedge funds and mutual funds is not a good strategy.
You're paying 2% to underperform Vanguard.
What Axe means here is that most hedge funds charge you a 2% management fee. But if you just invest in ETFs from companies like Vanguard, you can outperform most hedge funds and mutual funds. Let me show you what this means. So if we go to Yahoo Finance, let's type in the ticker here for the Vanguard S&P 500 ETF, which is ticker VOO, VOO. And as you can see here, the annual fee is only 0.03%, meaning you only pay 3 pennies every year per $100 that you invest in the S&P 500 through Vanguard, versus 2% or $2 per $100 investment per year to invest in hedge funds. And that 2% doesn't even include the 20% performance fee you pay hedge funds, meaning this: if you invest $100 in a hedge fund and the fund is up 20% that year, you don't make $20 on that $100 investment because the incentive fee for the hedge fund is 20%, meaning $4 of the $20 that you made. So now you're left with $16 or a 16% return on your $100 investment minus the $2 or 2% annual management fee, more or less. And it's even worse to invest in mutual funds, which are a scam, as many mutual funds massively underperform the S&P 500, and mutual funds have fees as high as 5% per year, yes, including the hidden fees. And to learn more about investing in ETFs, please go to etfdb.com, meaning ETF database. Let's very quickly go there together. Here we can research any ETF. For example, if we want to invest in Brazil, we can click right here and we see Brazil ETFs. In this next scene, Wags figures out Axe's game theory strategy.
You genius. It sucked the whole sector down the dumpers with it. Of course, we were out of telecom completely, and you hid it under some rumor of your midlife crisis.
Now that the telco sector is down materially, Axe has a lot of capital that he freed up that he can now put back to work in the market at a much lower price so he can generate alpha, meaning beat the performance of competing funds.
Couldn't afford to get caught in a race for the exits. As long as the rest of them thought I'd lost it, they wouldn't follow. We gotta be ready to push back in hard tomorrow or the next day after the market correction. We lever up.
So levering up means you not only invest the money you have, but you use margin to borrow money to invest a lot more. And when interest rates are low, investors use more leverage, meaning they borrow more money to invest, which is why low interest rates can really help the market, the stock market that is, and vice versa. However, leverage is a double-edged sword, and hedge funds had way too much leverage in the fall of 2008 when we were within 24 hours of bank machines not working. And this forced many hedge funds back then to go under. And since 2008, hedge funds on average use way less leverage to invest. Now you might be thinking, why didn't Axe just short Mundia Telco? Well, he can't do that because people might find out about the meeting he had with the CFO of Mundia Telecom, which is insider information. Then why would Axe signal to the marketplace that he is having a midlife crisis and is shutting down the firm? Because he manages billions of dollars, and if he didn't say why he was selling, then other hedge funds would find out he is selling, and they would think that Axe is being forced by investors to liquidate due to poor performance. And if word got out that Axe was shutting down due to poor performance, then major hedge funds would look at the 13F filings of what Axe owns, and they would short or sell those companies. Quick side note, how can we use 13F disclosures to find out what our favorite hedge funds or mutual funds are investing in so that we can actually consider buying those positions after we do our own research? Well, what we do is we go to sec.gov and then we type the name of the fund. So let's use Warren Buffett's fund here. Then we can open the most recent quarterly 13F filing and we can see what he owns. Now, when it comes to hedge funds shorting companies that a large fund owns because it might be closing, let me quickly show you an example of this in action. Back in July of 2004, when I was working in the hedge fund industry, the Wall Street Journal published this article right here about a large hedge fund named Andor underperforming. And some of us thought that might lead the company to shut down. And so we all read this article, and many of us looked to actually short Andor's biggest positions. And if you manage more than $100 million, by law, you have to disclose with the SEC through 13F disclosures what you own on a quarterly basis. So by Axe using the excuse of him slowly selling stocks because of a midlife crisis, and not due to his fund underperforming, what this meant was other hedge funds wouldn't go after his biggest long positions, meaning they wouldn't sense blood in the water. Axe even planted a story with the media about his liquidation of his fund.
You have heard the rumors that Axe Capital is shuttering.
Now, why would the journalist know about the rumor of Axe shutting down? Because Axe told them. And the media is a very powerful ally to have, but you have to help them with their careers too, which is what Axe did here.
What kind of swap?
I'm not going to write the article for you. You do an autopsy on the deal, you'll find yourself a Pulitzer in the carcass.
Now, just like how Adam Grant's masterpiece here, Give and Take, talks about giving in order to receive or take, Axe gives the reporter information. And this book explains why the richest 1% of people in the world are givers, even when it comes to helping the media. Now, the media gets a hall pass when it comes to insider information, as long as they don't transact on the information, and they never reveal their sources. Their source is usually this.
How is it sourced?
It quotes a senior official familiar with the matter.
So whenever you see an article reference according to people familiar with the matter, and if it's a reputable publication like the Wall Street Journal, then there's a very good chance that the rumor is true. So how can we use this to make money? Well, only use reliable sources that have a good track record like the New York Times Dealbook, the Wall Street Journal, and Barron's, among others. In fact, hedge funds set up what are called Google Alerts so that they get an email the second an article is posted. How do they do this? Well, what you do is you go to alerts.google.com and you set up this exact email alert. In quotes, you type this, according to people familiar with the matter. Then enter the company you're following, like Apple or Nvidia. So if an article is ever released, you find out immediately about it before most of your competitors do. Let's now move on to the next key topic in episode 5, which is the SEC and the FBI and others finally making progress with arresting somebody at Axe Capital.
Suspect trading pattern on Pepsim Pharmaceuticals.
Now, the SEC found out about Axe Capital making a fortune on Pepsim Pharmaceuticals, and the government starts investigating Axe Capital big time, partially because Chuck Rhodes thinks his wife, who works for Axe, is having an affair with him based on government surveillance.
Dale?
Mr. Rhodes, your wife's here.
What? Where?
Axelrod's house. Entered about 2 minutes ago.
Now, Chuck decides to increase his surveillance of Axe by doing this.
I think it's time to get a wire up on Axelrod.
Gonna be tough, boss. Axelrod has round-the-clock security. Rumors they do random bug sweeps.
Accurate. Many years ago, I was working very late at a certain finance firm, and a couple of securities folks walked around with bug detectors. Now, Chuck lets his emotions get in the way of the investigation of Axe's fund.
Get the FBI on him now. I want this genome mapped.
Now, the government caught Axe Capital's portfolio manager, Bill Stern, or Dollar Bill Stern, doing this.
Bill Stern bribed a Pepsim researcher for proprietary information on a drug called picarazine.
Now, Dollar Bill Stern got caught bribing somebody from Pepsim Pharmaceuticals because he is so cheap. Well, how cheap is he? Well, although Dollar Bill Stern used cash to book his travel when he traveled to get insider information so that the travel couldn't be checked with credit card statements, when he checked into the hotel, he used his hotel loyalty points card to collect points for staying at the hotel, which the government actually got access to. So how cheap is this dude?
You remember the first year you pulled down 7 figures?
Yeah, of course.
What'd you do with it?
Bought my mom a washing machine.
Yeah, so you buy her a house with a maid, not an appliance from Sears, you cheap.
Accurate. Many wealthy people are frugal when it comes to money. And Warren Buffett still lives in this house that he bought in 1958 for $31,500. And many billionaires in the finance industry are really, really cheap, which is how they got rich. Quick side note, if you work for somebody that massively underpays you at bonus season, then in this case, one data point often makes a trend. Look for another gig so you can get paid what you're worth. And Dollar Bill Stern found out about a material news release before it came out and made $89 million on the trade by bribing this R&D executive from Pepsim Pharmaceutical.
You mind inviting us up to the house?
Special Agent Terry McHugh, FBI.
Oh, hell.
Yeah.
So what is insider information? It basically means any news that has not yet been released to the public through a press release, for example. So what should you do if you accidentally hear insider information? Well, of course, never transact on it. And if you work at a finance company, tell your boss or compliance officer immediately so that trading on that stock can be restricted for at least 30 days. And the government has been using AI products like Palantir for many years to track insider trading. So violators will eventually get caught, especially as AI technologies mature. And the CIA, who invested in Palantir, would not have found Osama bin Laden without using Palantir. So expect the number of insider information arrests to materially increase over the next couple of years. And given Dollar Bill Stern's use of insider information to make money, this happened.
Lawyer!
We have a warrant for your arrest. You can get a lawyer whenever you're holding cell.
Lawyer.
William Stern, you are under arrest for
Lawyer.
insider trading and securities fraud.
Not accurate. The FBI usually shows up in the early morning to arrest insider information violators at their house and not at the office. Now, watch Dollar Bill's loyalty nod to Axe in this next clip.
You have the
Lawyer.
right to remain silent. You might want to exercise that right.
Let's go.
Also not accurate. There's no way this would happen on Wall Street, as offenders know that their boss will not protect them or their families. When an arrest occurs, offenders are smart enough not to use the legal services of their employer. Separately, in this episode, the traders are so bored because Axe is not buying new positions that they do this.
You doing this?
Get in on the action. I'm taking odds.
Go.
Accurate. And they're eating Yum Time products there too. I don't know if you caught that. But this happens a lot on trading floors. I once had a guy on my team eat 5 Big Macs on the trading floor, and people took bets to see if he would finish in a short amount of time. Separately, in this episode, Bobby meets with an investor who explains why he invested in Axe.
I deeply appreciate you taking the flyer on us back then, when no one else would.
You were cocky with terrible table manners, but I knew there was something. I didn't keep my money at AxeCap because I like you.
Accurate. Aside from, of course, monitoring performance before investing, confidence often leads to perceived competence in all industries.
And it wasn't the fact that you knew so much, it was how you lit up.
I love this place. I love what I do. I love what we do.
Accurate. Now, when I worked in the venture capital industry, we of course looked at the business model. However, we focus mainly on the entrepreneur and how passionate they are about what they do. In fact, in venture capital, sophisticated investors would always prefer to invest in an A management team with a B business model instead of investing in a B management team with an A business model. And I don't know if you caught it, but you can see a picture of Warren Buffett and Axe right there behind him. Okay, let's talk about grading this episode for Wall Street Realism with a buy, hold, or sell rating. Now, the episode did a great job of explaining the role of the media and the hedge fund industry, as well as the nature of FBI, SEC, and government investigations of a hedge fund, and also the frugal personalities and crazy betting that occurs on trading floors. However, what Axe did, telling everybody he's leaving the industry and then he doesn't, is not realistic at all, because it would really hurt his hedge fund in the long run from an investor relations and a human resources perspective, as it might stop new investors from considering investing in his fund. And it would also stop talent from wanting to work at his fund and could lead to top performers leaving his company. As a result, I'm going to give this episode a hold rating. Please like, comment, and subscribe, and I will see you soon in our next reaction video when we react to episode 6. Thank you.